Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning, everyone. Welcome to the Market Mindset. It's Andrew. I'm joined with Corey Diaz, who's the CEO over at Anfield Energy. Big news release today. What a news release. Even in the title, it's transformative. It's a lot going on, but boy, is this big news. And I'm looking forward to kind of breaking it down for chunks for people to understand. But congratulations. And let's just get right into it. Tell me about this deal that you've done, because it's two transactions and it's with UEC, which, by the way, has had year to date is up 60% or so. It's been a great year. They become a significant partner with you as well. Let's take step one. Tell me about the first part of this transaction.
Sure. Well, look, Andrew, thanks again for having us on. As you said, it is a transformational transaction for us, and it's a banner day. We're really excited about getting this news out there. The transaction, was split into two parts. So the first agreement related to the debt that we've held on the balance sheet for a number of years. As you recall, probably back in 2015, we acquired the assets from Uranium One, the hard rock assets. 2016, we acquired some ISR assets from Uranium One. And in that time, we incurred roughly $18 million of debt. And we've carried it from kind of a low price environment to a high price environment. So being able to transact in this environment is beneficial for the company in many ways. So that settlement, roughly $18 million has been split between two payments, one in terms of cash, about $9.1 million, and then the second payment of equal size in Anfield shares. And this puts UEC into a position where it's a roughly 15% shareholder in the company. Importantly, UEC's position allows it to propose or nominate a board member to Anfield. So I think that underscores UEC's commitment to the transaction.
Yeah, that's a big kudos to you as well, because them wanting to take a lot in shares, that speaks highly to the strategy and as it's transforming, because as we mentioned before, you've got the mill, you're swapping assets to focus down one specific path. And I think it speaks highly that they want to take a lot in share.
I agree. And to that end, talking about the swap agreement. So the second part of the transaction relates to our Wyoming ISR properties. So we are essentially trading those assets for slick rock. So in terms of the resource size, roughly 11 million pounds of uranium resource in exchange for slick rocks, 11.6 million pounds of resource, along with a kind of 70 million pound vanadium endowment. So, we're swapping, same number of uranium pounds, but we're gaining a significant number of vanadium pounds, more than doubling our resource on the vanadium side. So I think it's a fantastic opportunity for us. And once again, it puts us in the position to create this long-term mine and mill complex underscored or underpinned by the Shooting Canyon Mill. And so we are the controllers of our own production destiny under this scenario. So we're really excited with both the swap and the settlement. The share overhang or the share price overhang related to the debt has been there for years. We think that cap disappears in the back of this transaction, no longer having to depend on a third party for production in Wyoming and focused on our own production destiny in Colorado and Utah with Shooting, I think is the best opportunity for Anfield, bar none.
And you'd always said, you come from a very strong M&A background, that was going to be one of the keys to success, and to be able to pull the trigger when necessary and to move with some flexibility as well. And that, to put all these pieces together, I think people start to see, oh, okay, I see how this is playing out.
Yeah, look, I'm as the co-founder of Anfield and having a background in capital markets for 20 years, looking at M&A, throughout my career, even within Anfield, this is our fourth M&A transaction and building that asset base that has the flexibility inherent in it that allows us to make these types of trades or sell assets in order to ultimately meet our strategy of controlling our own production destiny, I think is a significant, win for us. So once again, moving from ISR, subject to third-party production, which could have been a near-term opportunity in some ways, but ultimately spinning those assets into something like Slick Rock, which complements our resource base so well in Colorado. In fact, this asset sits right next to one of our West Slope mines. I think it's such a significant fit and great opportunity for us to drive forward from this point on, underscored by our mill. And once again, our mill is so critical because it's one of only 3 licensed, permitted, and constructed mills in the United States. And, I can't emphasize that enough.
That is such a key component to build the strategy around that. It goes without saying. We can't say it enough because that is critical, and it's very impressive to have it.
Yeah, we're it's something that's been buried, in our releases, in our financials. It's never really gotten the credit that I think it's due. I think it's important to note that companies like an Energy Fuels or Uravan Energy or Encore, UEC, these are all very good companies that have the ability to process material. But there aren't many others outside of that. That's probably the entire group and what we consider our peers. And where we trade vis-a-vis our peers, so low. But I think a lot of that's tied to the debt. Now the debt has been lifted, that overhang has been lifted, so we should see some kind of uplift in our valuation to rival the valuations of those companies. There are a lot of other parties that have, market cap significantly larger than ours without the ability to process through a primary position. And yet, our market cap, pales in comparison to those companies. So we think that we should at least surpass those other companies and start to rival those producers and new producers.
And I mean, it's getting a nod from a major shareholder / stakeholder in UEC as well. For them to, one can imagine the behind the scenes conversations and then the technical, getting down to the nitty gritty, that they were impressed enough. That's a great partner to have as well. So there's so many conversations that would have been had that we won't bore everyone with, but to have them on side is certainly, it's good for investors to know.
Absolutely. Look, I think, another point to our M&A transactions, we've dealt with multi-billion-dollar companies in every transaction we've closed. So, going from Uranium One, we've closed 2 transactions, a multi-billion-dollar organization. Calder Corporation, owned by General Atomics, a privately owned multi-billion-dollar weapons defense manufacturer out of San Diego, and now UEC. We've found a way to work with these large parties, even though we're a tiny company in market cap comparison. We find a way to, build a bridge that creates benefits on both sides and allows for those companies to find a way to buy in and transact with us. And so I think that's a kind of unique step for us too, or unique position for us in the market, having that ability to compromise and find win-wins.
And let's not ignore the vanadium, the elephant in the room. I mean, energy right now is on everyone's mind. Uranium is certainly, it's blossoming to say the least, and that's the focal point. But with this mill, I think I'd asked you before, I mean, how hard is it to process vanadium out of the mill? And I think you said it's not that hard. We can do it. So you've got this big chunk of vanadium now as well. And I'll just throw in a quick thing that has a potential, and it's not it's not science fiction. They're doing it today, of really reshaping the battery storage world. So that's also happening where its potential is exponential. So you've got this. It's not just a credit. I guess that's what I'm saying. It's not just like, hey, we've got a small credit of XYZ. This is a significant, piece of mineral elements that you have. It'd more like it's going to be the vanadium pentoxide, but it's more than a credit. Let me just put it that way.
Yeah, I agree. And look, I think it's, that's the one part of the story which is a differentiator for us too. After this transaction, we are probably the largest in situ holder of vanadium in the marketplace vis-a-vis our peers. So, and that could be a whole other business. We're looking at over 100 million pounds of resource on the vanadium side, and opportunities, like you said, in clean energy, clean technology, battery storage, that could be a big business. You see Largo is creating a fund similar to the Sprott uranium fund,
Yes.
to promote and, show the strength of the vanadium side of the market. So for us, it's almost perfect timing to be in that market and potentially, be part of something that's growing in significance and growing and having growing interest. So
And it's the same theme. It is this clean and green tech. I mean, the vanadium story, without getting too heavily into it, is really that. It offers or promises the hope of a very changed world. And I think when people see we've got the cleanest energy in nuclear, and we also have a battery story here that could be developing with the vanadium redox batteries and the need for vanadium, it's really interesting. It's very cool.
yeah, I agree. And, we've got investors who have an interest in both sides of the business or either side of the business. And, we can tout either side. And I think that the vanadium story is kind of this quiet side, which will be turned up as we go further and further down the line. And just coming back to production of vanadium, that's something that, through a mill, we can do it, but we need to add another circuit to the mill. But the cost is probably between $10 and $15 million. And given the number of pounds that are there, that would be money well spent. So we're not particularly concerned about the upfront capex or something like that, knowing the return to be significant.
And the last piece of the puzzle, or the press release as well, is the engagement with Haywood as well. So you're raising 12 million as well on this as well.
Yeah, so it's a bought deal led by Haywood, $12 million. The potential to upsize. I think that's a critical piece of this transaction. In order for us to consummate the transaction, we need to pay UEC $9.1 million. So these funds will be the funds required to make that payment. So, there could be further upside for us to raise more money, but at a minimum, the funds are there in order to close this transaction. So we're feeling very confident. Haywood's feeling confident. The funds are there, and we're on the run now. We're not walking, we're running. As soon as this is done, we're starting to advance the assets that we have, get that mill as close to production as we can, and be in a position to take advantage of both uranium and vanadium prices upticking.
And I'll just kind of throw my comment there. I mean, getting a bought deal is always very nice as well from a big firm. That also kind of speaks volumes, that it's not just we're raising, we'll see what we can raise. That also kind of is a good kudos or a tip of the hat from the firm, seeing what's happening out there. And I think for a lot of generalists that are watching and they see that, it gives a bit more reassurance too.
Yeah, exactly. I think the combination of Haywood providing a bought deal and the fact that UEC is willing to take a significant portion of the debt owed in shares, and having the ability to place a nominee on our board for kind of a long-term strategic position, I think that speaks volumes as to where both parties see this story going. They don't see this as kind of a one-off. I think they see this as a partnership that continues over the years.
Well, it certainly was. I mean, it was such a big news, and it's a big news release. And I wanted to make sure that we could chat with you so that people weren't lost in each step. And it's fairly simple, but just so they get a clear understanding of how big a deal it is, and how it is, like you said, you're running now. Like, it's not a matter of wait and see. This is all happening. The sector is moving, and you've kind of shown that nimble ability to pivot and to exercise and to act effectively and efficiently in a very, very short period of time.
Thanks. Yeah, this has been our motto the whole time, is just, create that strategy that allows you to bring assets in and, transact in those assets in order to put yourself in a better position. And that's what we've been doing from day one. We knew the mill would be a critical point at some point in time for the company. It wasn't always a direct line to that, but we always had the goal of creating an asset base that flows through that mill. That was always been goal one. And so we found a way, we meandered a little bit, but ultimately following the same goal of an underpinned minor mill complex on the conventional side of the business.
And let me just throw this out as kind of a wrap up, but what would it take for someone to try to get the permitting and to get a mill, like right from today, if they started today?
Well, there's some, there have been some numbers put out there in the past. I can think of one peer, probably 8 years ago, that had proposed a mill in New Mexico, a 500 tons per day mill. Our mill is 750 tons per day, so 50% bigger. The cost for that 500 ton per day mill was roughly $150 million. And our refurbishment costs would be $25 to $30 million, and probably a 2-year time frame to get that up and running, with everything kind of moving, as one would hope.
Yeah.
So $150 million for a smaller mill, probably looking at a case of NIMBYism, not in my backyard.
Yeah.
Finding enough licenses and permits, and making sure that this gets built would probably take at least 5 years. And then, as a public company, if you want shareholders not to feel the fatigue of holding on for 5 years, I think it's a bit, that's a harder way to go about this. I think that's another point that I like to make, is that all the assets that we buy, they're not greenfield assets. These are brownfield assets that have resource or past production or historical resource.
Yes.
They've got something in place that demonstrates, viability in some form or fashion. And those are all the assets. It's all, we've been very consistent. So in terms of upgrading resources, it's a relatively cheap cost. It's a resource report estimate done by a consultant. And it's the same with the mill. We're not starting from scratch with the mill. We bought something that is built and just requires some money for refurbishment. And, so everything that we're building, has been advanced or has been used in the manner in which we are seeking to use it. So we are very, very comfortable looking at ourselves as a relatively near-term producer.
It's great to see taking away the unknowns, because once again, it's not exploration. It's not, hey, we've got a mill and we're going to look for something. It's that, no, we're getting closer to telling you timeframes and numbers, which is what an analyst loves to see, is that, okay, we've got this much in the ground, this much at the mill, and this is how long it's going to take us. That's ideally what you want to see. And I think it's worth, I'm glad you brought that up so that people don't think, oh, wait a second, sure, you've got a mill, but are you looking on these properties for stuff? No, this is not that. These are assets. So, and they can be put in production very quickly.
Exactly. I think that's a point to emphasize. We're not a greenfield company. Greenfield companies have a place in the uranium sector. It may not be for this cycle, but certainly we always need to find new resource and have those resources developed. But that's not something that we're looking to do. We're looking to take advantage of the current environment. And we think the best way to do that is through assets which have performed in the past, and underpinned by a mill which is in existence and just requires a little bit of money to get up and running again.
Well, excellent, Corey. This I'm sure you're gonna have lots of calls talking about the details of this. Great news. It's great news, and we're gonna be following, because there's gonna be lots more to follow after this. And I'm sure we'll have people reaching out to us and having questions. But congratulations today. It was a big deal to put together, and well done.
Thanks very much, Andrew. Thanks again for your time.